Is the housing market starting to pick up in the United States? That's the question that we're going to be answering in this video. And the data isn't so clear on either end. On one hand, you have more people touring homes than there were this time last year. On the other hand, there's less pending sales and there's more new listings, which would be a sign that maybe the housing market's slowing down as more inventory comes to the market and less homes are going under contract. Now, I know from personal experience, me personally, I'm busier than I was this time last year. I'm busier than I was a few months ago. But of course, I'm just one agent out here operating in the market. So we're going to dive deep into the Redfin weekly market update to take a look at what's going on across the country and help you make the best decision for your home purchase or sale here at the beginning of 2024. Before we get into it, my name is Liam O'Reilly. I'm a local realtor here in Vermont. If you have any real estate needs in Vermont or anywhere else across the country, all my contact information is in the description. Reach out to me directly and I'd be happy to help. So let's get right into the article here. So more people touring homes. This is the title, and I know I kind of cut it off here with my face, but more people are touring homes, but that hasn't yet translated into more sales as far as the weekly housing market update out of Redfin, which makes sense, right? Sales are a lagging indicator. If more people are seeing homes now, they have to go under contract. It takes 30, maybe 60 days to close. So sales lag the buying activity that happens out there. But even when you look at the buying activity, things are not so clear. So we take a look at some of the highlighted areas here. Redfin's Home Buyer Demand Index, a measure of requests for tours and other buying services, rose 6% from a week earlier. But at the same time, mortgage purchase applications declined from a week earlier, and pending sales posted their biggest year-over-year decline in 4 months. And if you remember what was going on 4 months ago, interest rates were at around 8%, which was their recent high, their high in recent history, high in over 20 years or so, that 8% mortgage rate. So the housing market was really in a slump 4 months ago. And the fact that pending sales are below that, it is, is something to note at the very least. So we have a little take here from a Redfin agent. We'll talk about that in a minute. But let's take a look at some of these leading indicators out of Redfin's data here. And I think I highlighted the ones that I think are the most important. So take a look at this. Mortgage applications seasonally adjusted down 20% year over year. Homebuyer demand index down 17% year over year. And remember, 2023, the winter of 2023, it wasn't all that busy either. Now, mortgage rates were lower than they are today, but not that much lower. Year over year change. Mortgage rates were at about 6.13%. Now they sit at about 6.6% today. So they're, within a half percentage point of the mortgage rate that there was last year. But at the same time, 20% less people are submitting applications to purchase mortgages. 17% less people are requesting tours for homes from Redfin, which I think is crazy. And 16 Google searches of homes for sale are down 16%, which I think that's a big indicator, right? If you're out there looking for a home, I know a lot of the buyers that I work with, they're constantly on sites like Zillow and Realtor.com. Of course, I do my best to send them listings as well, but a lot of times those apps are faster than I can send the listing to them. So they're constantly looking for homes for sale, but that's down 16%. Now, at the same time here, touring activity as measured by showing time, that's who we use when we have a listing. You schedule it through showing time, or the agents schedule the showing through showing time. That's up 9% from the start of the year, which is a bigger increase than it was this time last year. Last year was up 5% from the start of the year at this week last year. So we really have two conflicting data points. And as we go through this data, the conflicting data continues, where you have stuff that you have data points and indications that would seem, at least to me, like the housing market is moving in one direction, either heating up or cooling down. And then you have other indicators that say the other thing. So right here, I think this is a great example. The year-over-year change in pending sales and new listings. New listings are up 5% year over year, right? So more people are listing their homes this year, right now, than they were this time last year. So seasonally, the same time of year, there's more listings. At the same time, pending sales are lower. Pending sales are down 8.5% year over year. So What I would expect to see from that is inventory start to build across the country, but that's not what we're seeing at all. We see right below here, active listings are down 4%, which I think is a little strange, because if there's less sales taking place and there's more listings coming to the market, that should result in more inventory because there's less transactions going on. As the influx of listings hit the market, less of those listings would sell, and more inventory would build. But that's not what we're seeing. Inventory is still down 4% from last year, which, if you remember last year, there was hardly any inventory on the market. Of course, we ended the year at a 28-year low in home sales, almost 30-year low in home sales. So not many transactions happened last year. A big part of that was on the list side. So we're getting more listings, but we still have less inventory despite having less pending sales. It's all very confusing and very tough to navigate. But I'm going to talk about one indicator here that will help you navigate it as we move forward. So just moving through these other stats here, share of homes off the market in 2 weeks, 30% of homes up from last year are off the market in 2 weeks. So even though we have more listings, there's slightly more homes that are going under contract in 2 weeks or less than there were this time last year, right? That's the rate, that's the pace of the market. The market is still moving very quickly across the country. And 22% of those homes are selling for over list price, which is more than there was this time last year. 21% of homes sold for above list price this time last year. So again, very conflicting data. And basically, to summarize it, what we have going on right now is there's less home buyer activity as measured by Redfin. There's less people out there requesting tours and services from Redfin agents, which, of course, it doesn't represent all of the real estate market, but it is a relatively good indicator of the housing market because Redfin's a big company. They have a lot of agents. And so their indication of their home buyer index is a pretty good representation of the overall index across the country. Now, at the same time, pending sales are down about 9% year over year. So there's less transactions happening. There's more people, or there's less people reaching out to Redfin agents. There's less transactions happening, and there's more listings taking place. With all that taking into effect, again, that should put negative pressure on home prices and should drive inventory up. But that's not what we're seeing. Inventory is down 4% year over year. So that was just a summary of what we just went over here. Now, look at this, new listings. So while they're up 5% nationally, right? The national housing market isn't really a thing. There's individual housing markets that make up this whole U.S. housing market here, and we see here new listings in a variety of cities. 16 metros declined. Denver, new listings are down 20% year over year. So if you're in Denver and you're watching this and you're saying, hey, new listings are up 5%, how come there's no listings for sale in my neighborhood? Well, not in Denver or Chicago or Atlanta or here in Vermont. New listings are not up 5% here in Vermont. So it's all relative to where you are. But a good portion of the U.S. economy is seeing declines in new listings across the market. Of course, if you're in Fort Lauderdale or Phoenix or San Diego, you're probably seeing a flood of inventory on the market as pending sales are down and new listings are way up. But the indicator that I think we should be paying most attention to is the months supply of homes on the market. And so that's right here, 4.8 month supply available on the market, according to Redfin here. And so January 28th, 4.8 month supply. And you can see this is the highest mark that we've had in recent history, highest since 2021, which is pretty crazy. So this is a ratio between home buyers out there, the ratio of pending sales on the market, how many transactions are happening each month versus how many homes are on the market. So in other words, if no new listings were to come to the market, based on how many buyers are out there, how many months would it take before buyers purchased all that inventory? That's the ratio that we're looking at. And right now it sits higher than we've seen in years past. And now this time last year, you can see this orange line is the 2023 numbers. So it spiked this time last year, of course, not quite as high as where we are now, but moving into the future, moving into the spring, this is going to be the most important metric for you to watch as a home buyer or a home seller out there. The higher this number stays, if we see it stay flat or continue to rise to maybe 6 months supply, then that's much more favorable for buyers. That means that there's more homes on the market than there are buyers out there to purchase them. Essentially, that's what we're saying. That's what this whole ratio is. Now, if we move into spring and things collapse like they did this time last year with uh, mortgage rates coming down. Of course, they haven't really come down much yet. In fact, they're up from their lows. They sit at about 6.5% here in Vermont, according to New England Federal Credit Union. But if we see rates drop, which we very well could as we move into the spring, with the Federal Reserve and what's going on in the economy, then we could see month supply start to come down. So this is really the most important metric that you should be watching as a home buyer or a home seller out here, because this is a ratio between the home buyers and the home sellers. And the higher that number is, the more of a seller's market the housing market becomes. The lower the market is, as you can see in 2022 and 2021, at around 2 months supply, that was obviously a crazy seller's market. The higher it is, buyer's market, the lower it is, that's more of a seller's market. Now, what is going on in the housing market? What is causing this discrepancy in data, which is causing, new listings to increase, active inventory to go down, and home buyer demand to really be crushed? And when you take a look at the chart of this Redfin home buyer demand, it's all the way at the bottom here. Take a look at this. January 28th, this blue line down at the bottom is the 2024 data. And you can see here, this 100 mark, it says it right at the top. My face might be blocking it, but there you go. Weekly value of Redfin seasonally adjusted home buyer demand index is based on requests for home tours and other home buying services. Okay, 100 equals January, February 2020. What was going on in January and February of 2020? That was right before the pandemic kicked in, right? I think right at the end of February, the NBA shut down because of the pandemic. Obviously, March Madness got canceled in March. So January, February 2020, the people were fearful as COVID was ramping up. There was fear in the market, and not many people were out there looking at homes with this pandemic looming. So the fact that we're only slightly above the January, February 2020 levels is really shocking to me. You can see here in 2023, we were we're obviously well below 2022 levels, but well above still the January, February 2020 levels. So home buyer demand index, people out there buying or looking for homes to buy, is very low across the country. So again, and that all plays back into the month supply of inventory on the market. If that month supply continues to rise, that could be a combination of new listings declining, but also a combination of home buyer demand declining as there's struggles in the overall economy. And when you ask yourself what could be causing this home buyer demand to go down, there's a variety of factors. I think one of them, at least one of them, are the layoffs that people are seeing out there in the economy, even if they're not experiencing them themselves. So I just did a quick Google search here for layoffs, and we'll just go through some of the headlines here. DocuSign to cut 6% of its workforce. Google, once happy office, feels the chill of layoffs. Amazon layoffs at healthcare units. Snapchat is cutting 10% of its staff. Tech companies are laying off thousands of workers. So a lot of companies here. Swift, fresh round of workforce reductions. Microsoft announces layoffs in gaming division. So a lot of companies out there are trimming their workers right now, and I think that is affecting the housing market, at least generally, and we're seeing that in the home buyer demand. Now, of course, as the economy gets worse, the likelihood that the Federal Reserve is going to cut their Fed funds rate helps stimulate the economy and bring mortgage rates back down to 6% or maybe even lower. I think that's a reasonable possibility as we move into the summer months here. The worse the economy is, the more likely the Federal Reserve is to cut rates sooner and to cut them faster than what they're announcing right now. So anyway, pay attention to the month supply of inventory if you're a home buyer or home seller out there. If you need anything, reach out to me directly. Thank you so much for watching this video. Leave me a comment. I love hearing your opinions. I learned so much from you folks. I'll see you in the next video.